KKR is down 31% since the inauguration. Apollo's down 24%. Bryn Talkington buys both. Tell me more.
Yeah, I've been following these stocks a long time. We do a lot in the private markets, more on the private credit side. But both of these charts look like tech stocks. And I just think that this is where price and fundamentals have separated themselves. Both of them are growing revenues and earnings in the low double digits. You're going to continue to say, I hate this phrase, the democratization of alternatives. Nonetheless, they're going to continue to capitalize on that. And so I think this is a great opportunity when you get a sell-off. I was excited to add to these names. I will continue to add to these names. These are initial positions throughout the year, as I do believe we'll continue to have volatility. But 1-2 years from now, I feel these companies are going to be a lot more expensive from a price. Yeah, Josh.
So here's the I like these are great businesses. Here's the risk. If we're going to have a 2018-like year, the number one thing investors are not going to want to listen to is pitches about locking up capital and making loans to companies that need to be supported with credit in the private markets. So I think what ends up happening here.
I don't agree with that.
I think it's just the opposite, Josh, because what happens in 2018, people are like, I can't take the equity markets anymore. Yeah.
No, because that's a mirage.
Yeah.
If Cliff Asness is watching, he's gonna pull his tie off and pick up a sledgehammer. The volatility exists. It just doesn't show up for 2 quarters because of the way they mark their portfolios. But I'm just speaking from so we understand institutions are going to remain invested in private equity, private credit, no question. And from that standpoint, I think these businesses are fine. But if we think the earnings growth is going to be fueled by this democratization, I am telling you, based on conversations with a lot of people in the family office and RIA world, there's a question mark. Like, do I have enough? Do I really want to go down this road right now?
Yeah, I think, you and I are both in the same business, Josh, and I think we traffic in this space. I totally always appreciate your viewpoint. I think that all the people I talk to in the family offices, the RIAs and individual investors, they're like, I don't have enough of exposure. I think what kind of exposure you have is very important. This is not a homogeneous asset class. It's incredibly distinct. I just think that these stocks have sold off so much. I know that they are AUM, their 2 and 20 model isn't great for investors. It's great for their balance sheet. And so I wanted to own, instead of buying GP stakes in a private equity firm, I can just buy the publicly traded version of that. And I think that will make money over time. It's really as simple as that.
Yeah, so the analysis just isn't that easy. I think that Bryn's right over time, private equity, but what's hitting the stocks? Number one, the IPO market that was supposed to be open, with Trump coming in the first half of the year, now it's at least second half.
Yeah, with the volatility now,
right,
of course.
Probably next year. Also, the analysis isn't that easy. For example, if you're in a private equity fund that has a disproportionate weighting towards healthcare companies and they're dependent on Medicaid, I can tell you that they're not going to do well. If you're a private equity company that has a weighting towards companies, industrial companies that are dependent upon tariffs not happening, then they're not going to do well. So you got to look at what the underlying investment themes are and holdings in the private equity companies. You just can't buy them all and buy them because they're down. I'm not suggesting Bryn's doing that, but that's the analysis.
Why do you guys think they're down? Why do you guys think, so the top 6 publicly traded private equity names, KKR, Apollo, Ares, Owl, Blackstone, why do you think of all the financial sector stocks, they're A, down the most, and B, they've lost $100 billion in market cap in 7 weeks?
Because so many people bought them.
If my thesis is not the going thesis, what do you think is the reason?
Well, I just told you that the IPO market, if you take a look at technology,
so exits.
It's going to be crushed. Josh, I'll finish answering your question. Number one. Number two, you had a lot of tourists in the space that were attracted to the yields. And they said, oh, what do I own here? I know I've got a yield, but what's the underlying asset? So they didn't know what they owned. Then they're hearing about the IPO market being pushed out. They're hearing about the underlying portfolios not working as they should.
All right, you grab a sip.
I need
All right.